Happy New Year, everyone. What you see before you are the closing prices of various exchange traded funds. The date range for these closing prices is December 26, 2024 through December 26, 2025. So you have about a year's worth of data. The dependent variable in this analysis is exchange traded fund SPY, highlighted in yellow, which tracks the S&P 500. SHY, which is to the right of that, tracks the government notes, like short-term, 2-year notes. UUP is an exchange traded fund which tracks the dollar. USCI tracks a basket of commodities. FXY tracks the Japanese yen. FXE tracks the euro. FXF tracks the Swiss franc. TLT tracks the U.S. long government bond. GLD tracks gold. GBF is sort of like a credit fund. IBIT tracks Bitcoin. HYG tracks high yield corporate bonds. Excuse me. USO tracks oil. And VXX tracks the VIX. So I ran a correlation analysis of all these securities, which is on this table right here. And again, the dependent variable is yellow, that's SPY. And you see the relationships between the dependent variables, which are all highlighted in green on the left. So for example, SHY has a positive correlation with SPY, and it accounts for 26.6% of the variance. So as SHY goes up, SPY goes up by about 26.6%. FXY over here, which is tracks the yen, has an inverse relationship with SPY. So as FXY goes down, SPY goes up by about 25.88%. Now, the highest correlations at the very bottom, and that's the VIX. So the VIX accounts for 86.78% of the variance on SPY. It has an inverse relationship. So as the VIX or VXX goes down, then SPY goes up by 86.78%. That's a very strong correlation. But I don't like the VIX or VXX because it trades too chaotically. I mean, you could wake up one morning and the VIX could spike out of fear by like 8 or 9%, driving SPY down. I really don't like it. So what I'm going to do in this analysis is focus on the exchange traded fund, which has the second highest correlation with SPY, and that's HYG, and that accounts for 81.62% of the variance, which is also very strong. And what I like about HYG is it trades more incrementally. So it's a lot easier to use it to predict what's going on with SPY. So I created what you see on the right, this chart. It has the cumulative percent return of both securities. In orange is SPY, and in blue is HYG. And if you see, they pretty much trade together, although SPY has bigger swings. But from a chart perspective, they trade relatively the same on how they go up and down. And so, what are you going to do with this? Okay, so you want to maybe come up with your own trading system for taking positions. So what I like to do is look at daily moves. So I created this chart here is based on how HYG did percentage-wise from the day prior. So it's only how it did daily, like from the percent, did it go up or down from the day prior? That's it. So that's all it's showing is the daily percent return. Same thing with SPY. How did it do percentage-wise from the day prior on each day? So the orange line is SPY, and the blue line is HYG. And if you notice, every time SPY trades up disproportionate to HYG, it'll snap down. So as for example, on, I don't know, January 3rd of last year of 2025, it spiked up by 1.25% above HYG and then immediately snap right down. You see on January 27th, it went down by 1.41%, much more than HYG, and then had a rally. Okay. There's some outliers. If you look on April 4th, SPY went way down, disproportionate to HYG, and then snapped all the way up here on April 9th, and then went all the way down. So I would say from looking at this long-term chart, I would say that when SPY goes up by, let's say, more than 1.5% above HYG, then you want to go short. Similarly, if it falls by about 1.5% or more below HYG, you want to go long. So I think that's what you can do with this data. And again, it's a year's worth of data. But correlations change over time, so these analyses have to be done periodically, I would say. So anyway, I want to wish everyone a happy new year again. Read my disclaimer, and please like my video and subscribe to my channel to receive the earliest copies of my videos. Thank you again.